You really have to do your own homework and your own research and almost become an expert in real estate yourself. And the expert really is you need to become an expert underwriter. Even if you've been investing with people in the past, you've invested with sponsors and they've showed good returns, you know what? The private equity model for commercial real estate is one that you've got to do deals in order to make money. And so as an investor, you have to look at your latest deal the same way that you looked at your first deal.
What is Agent Ignite? Are you wondering how you can make more money and create a competitive advantage for yourself and your clients in this ever-competitive real estate industry? Agent Ignite is the key to furthering your knowledge, establishing your expertise, and positioning yourself as a go-to expert. They deliver new and relevant knowledge so you can expand your clientele, close more deals, and ultimately increase income. Each month features a new guest speaker who will deliver on what is most relevant for your business. As a member of DMAR's Market Trends Committee, an avid champion for building wealth through real estate, and a self-proclaimed data geek, Nicole will share market trends and commentary that will add value to you and your clients. Staying up to date on industry statistics coupled with niche topics delivered by industry experts will help you motivate your buyers and sellers and make you more money. Sign up for the next Agent Ignite session at theruthteam.com/events. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest, he started from cleaning toilets to managing properties to everything in between. Now he has built numerous successful businesses that help us in the commercial real estate business. His name is Rob Finlay. He's CEO and founder of 30 Capital. He spent more than 2 decades bridging the gap between innovation and technology to push the boundaries of commercial real estate. He's built a portfolio of commercial real estate assets, a financial advisory and services firm, and 10 technology platforms that open up access to data management and insight generation tools previously available only to institutional and enterprise operators. He actively invests in his communities and mentors emerging leaders. I enjoyed this conversation with Rob. It's interesting. He and I have numerous things in common, but even to living on a farm in Virginia. But he goes through numerous things that you're gonna learn today about passive investing and some risks that he tries to assess the best that he can. He goes through numerous things that you want to know as you're talking to an operator, considering them for an investment. But we also get into some new technology that's becoming very popular, which is blockchain. And he talks about that with what time we had left. He's become an expert in that space. And, it's just interesting, that technology that's coming. And I want to keep you, the listener, informed as much as possible when we have somebody on like that. And so hopefully maybe we can even have him back and talk about that specifically. But I hope, if nothing else, you've learned a lot today by listening to Rob and I about passive investing risks. Rob, welcome to the show. I've enjoyed our conversation just before we started recording, so I'm looking forward to learning more about you. I know the listeners are going to learn a lot from you, just hearing about your background. Wow! And so, give them a little more about who you are, and there's many things that you have done that you're so experienced in that affect our industry in a big way. And so, give them a little bit about that, and let's jump into a couple of main topics today.
Yeah, sure. Well, first of all, Whitney, thank you so much for having me on the show. It's a real honor to be on this. So thank you very much for having me. Yeah. So as we were talking about before, my background is, first and foremost, I'm a real estate person, grew up in real estate. As much as I tried to separate myself, I went to Wall Street, tried to do something other than that, was right into real estate, structuring CMBS and CLOs and things like that. Then started my career by starting a company called Defease with Ease, or Commercial Defeasance, and really started, and that was about 20 some odd years ago. And so if you look at my life today, I am really focused on three and a half main topics. One is real estate. I own and operate real estate throughout the United States. Also a very active investor and joint venture partner on deals throughout the country. We are focused on technology and innovation through our holding company, 30 Capital. We provide software solutions like Lobby CRE, which is a data management and asset management platform, Entity Keeper, which helps you manage your entities, and other software solutions, as well as our capital market side, which is our Defease with Ease, Commercial Defeasance, and our hedging advisory. So we're helping borrowers on things like swaps and caps. And then the real estate. And then obviously we do a little bit of through our Volana Capital, which is our fund in blockchain, cryptocurrency, decentralized finance. So really trying to keep busy on all things, but really focused with the topic of commercial real estate.
That's awesome. I love your focus on, hey, if there's a problem, I'm going to create a solution. And it looks like, you've just done that time and time again and successfully. And I'm going to look up a couple of those things that you mentioned there, like the entity keeper, that I'm like, oh my goodness, all the entities, how do we track all this stuff? But you created a solution. So I love that. Just the mindset of that, right? Hey, there's a problem. And maybe that could be a way to create a business, right? And you've done that time and time again. Just with your background too, I know you and I talked about this ahead of time, but what we're going to focus on, you have so much experience in real estate and investing and whatnot. I want to, and even in passive investing, joint venturing. I wanted to get your take on some of the just passive investing risks and things that you see maybe passive investors, mistakes they're making, possibly things that maybe, a lot of passive investors and ours listen to this show. So let's help them a little bit with some of the risks, some of the things that that, hey, they need to be looking out for. And especially if there's anything that's like market specific for today, that would be great.
Sure. Well, I think, one of the biggest things when I'm asked from an investor or when we're looking at deals ourselves is this concept of risk-adjusted returns. I think we talked about before where you could see some of these crowdfunding sites and the ones that seem to be oversubscribed are the ones with these outlandish return. And yet some of the best real estate is ones that maybe are struggling to find investors. And that to me is really the pitfall of investing. I shouldn't say pitfall, but one of the difficulties in being a passive investor in commercial real estate. You're looking as an investor, you're looking for allocation, you're looking for diversification, you're looking for all of the benefits that real estate income, appreciation, all the things that commercial real estate provide. But there's no open book like there is in the stock market, right? I can look at betas, I can look at earnings per share, I can benchmark and all that stuff. In commercial real estate, you really don't know. And so you really have to do your own homework and your own research and almost become an expert in real estate yourself. And the expert really is you need to become an expert underwriter. Even if you've been investing with people in the past, you've invested with sponsors and they've showed good returns, you know what? The private equity model for commercial real estate is one that you've got to do deals in order to make money. And so as an investor, you have to look at your latest deal the same way that you looked at your first deal. And that's understanding the location risk, the underwriting risk, especially now as deals become very competitive. The multifamily space, industrial space, every space, quite frankly, in real estate has become so competitive that the underwriting that investor or that a sponsor does becomes a little bit tighter. And you as an investor have to understand the checks that you're writing today are there is some risk, inherent risk to doing deals today.
No doubt about it. I love your thoughts around that and how you need to do your own research and homework and you need to become an expert in at least. You got to understand quite a bit of it. You may not become the expert that, the underwriter on that team is just because you're not doing it as much, right? And seeing as many deals. However, what's your thoughts on, the listener right now is thinking, well, how do I become an expert in underwriting? Or I just don't have time to, to go become an expert in that. However, they still want to make sure they're making proper investments, right? Or doing that research. What's some of your thoughts on how do they learn enough to be confident and ensure the best they can that they're making a good decision?
Sure. So from that standpoint, and you're right, you need to have some expertise, but in reality, your expertise first and foremost has to be as how well can you underwrite the sponsor, right? And that's really what it comes down to. You're investing with somebody and you're expecting them to understand and know what they're doing in order to produce those results for you. So I think it comes down to when you look at the sponsor, the company that you're investing with, what's their background? What are the systems that they have in place? What are the risk mitigation things that they have for themselves in order to sort of ensure that you're making the right decision, right? So it's one thing if the shop has nobody around, they're not using any systems, they're not looking at market data, they're not looking at other things, those would be triggers to me. So I think it would be really helpful for investors to have sort of a set list of questions about what they would think. And these are probably very similar questions that somebody would ask a private equity firm or a hedge fund. Hey, give me your past results. What do you do about this? How do you do this? How are you a steward of my money? The second thing I look at is leverage. Every deal. So I first underwrite the sponsor. Is it somebody that I'm going to do business with? Okay, you've met those requirements. Now let's look at leverage. A low leverage deal usually can work, right? High leverage deals, the risk becomes great. So the amount of leverage, so anything over 70, 75%, and this also depends on property types and stuff. But when you start looking at high level of leverage, that's when I start to get a little nervous as well. Then the third thing I look at is really sort of just common sense stuff, right? So common sense is really important because that's really what real estate is, right? You don't need to have any specialty degree or anything to go out and buy real estate. You can, if you have enough money and you're the winning bid, you can buy anything. So you really have to apply your common sense. I think one of the things that we talk about quite a bit, and not to get hyper technical, but if you start looking at, we're also on the capital market side, as I said. And so you start looking at as treasury rates have moved up, now they're back down, but the volatility in the treasury market has been huge. And so when we start seeing people buying, especially where cap rates are so low, the sensitivity to cap rates to interest rate changes is huge, right? So for example, if you buy a multifamily at a 4 cap and treasury rates run up 20 basis points, well, now in order for you to cover that 20 basis point increase in the cap rate, you now have to expect to see a 30 or 40% revenue increase in the property. So as an investor, I look at this and say, okay, are the rents that much lower than they are in the market? So it's just common sense stuff. And then, last, right, can people afford? Models, in order to make the numbers work, have to show revenue increase, right? It's what people are doing. I'm buying it. I'm going to put some money into it. I'm going to create some extra value for it. Is it too much? So those are really.
I appreciate how you lay that out. And I was thinking about, especially the last one too, the common sense thing. And more lately I hear about, as far as raising rents and how much they're being raised. And part of me is like, well, just because we can raise rents 15% in a year or 20% in some markets, should we? Can the people, or even if we can the tenants afford it? Right. And I love that point that you made there. I mean, can they afford it? That doesn't mean we can actually get it long term, right? Or even if that's the best option. And also, I wanted to back up just a little bit. Numerous things about questions for a sponsor, and I get questions like that often as well. What should I ask the sponsor? If I have 20 minutes or 15 minutes? And there's some sponsors you get 5 minutes with, on the phone, depending on their following all those things. But if you had to pick just a couple of questions for that sponsor to help you to say, this is somebody I want to work with, depending on how they answered those 2 or 3 questions, what would those be? And maybe it's still the leverage and the background and the common sense, but maybe specifically.
Well, I look at sponsors in a very different light. I think of a sponsor. So the questions I ask are, one is, what are you doing differently to show alpha, right? That's the biggest thing. Right? Because if you're looking for money from me, and this isn't in a fund, this is on an individual asset basis, that means that you just paid more than anybody else for this property. So what do you do to show me alpha, that incremental increase? What are you doing? And that's number one. And that can't be a soft BS answer like, oh, well, I know real estate better and all that stuff. It is a real. What are you doing differently? Are you a Cortland and you use data and analytics, or are you using advanced mapping? Are you using things that technology and innovation to make sure that you're showing incremental an increase? And that would be the one. So one, how are you showing me alpha? 2, so what are you doing to differentiate yourself from everybody else that's asking for money? That's the number one. Number 2 is, are you really a real estate organization, or are you just an owner of real estate yourself? And by that, I mean, so often we look at real estate as, in these real estate private equity firms, are companies that are just made up of individual deals. I want to invest with a company that actually their business is real estate, and they look at their business as real estate, and the properties are just a function of it. In some cases, we recently invested with a group, and they came out with this great line where it was like, look, we're not a real estate company. We are a technology company whose product is real estate. And that to me is proving, hey, you're doing things differently. So that's the second thing, right? Because I don't want to invest with somebody, and let's say they decide not to show up one day. Who's going to manage my money? Who's going to manage that asset? So making sure that things are in place to manage that asset, to manage that property. So those are really the two, the two big things that I look at. Are you different, or are you just like everybody else? And can you prove to me alpha? And then do you have any type of enterprise value?
Love that. That's such great advice. I appreciate just breaking it down so simply as well. I know the listeners appreciate that. And I want to spend a few minutes now talking about another thing that you're an expert in, because I feel like it's become a very popular topic. I've been to conferences on this, and I'm trying to learn a little bit as we go. I can see that it's going to be something we're going to have to know about, more and more. And that's just the blockchain technology and how you see that connecting to real estate. Maybe some things you're preparing for or already have prepared for, and just seeing how that's going to work together. But maybe you could shed a little light on, we could do probably hours just on what blockchain is, right? But maybe you shed a little bit of light on blockchain, and then let's talk about how that's going to be connected to real estate.
Sure. Well, I think there's, unfortunately, it all sort of gets grouped up into sort of this Web 3.0 or, cryptocurrency. Like I hear so much stuff, right? So there's a big difference between blockchain and cryptocurrency. There's a big difference between blockchain and decentralized finance somewhat, and also into metaverse and all the stuff, right? And in typical fashion in this industry, the market is, it goes and it starts and it's like there's a whole bunch of things going out and a lot of stuff going and happening, and then it gets to a point where now money gets into it and it gets all press and stuff. So blockchain in itself is just a ledger system. It's just a way to digitally record one thing to another. And that's it. It's ownership. It's just, and that's why I think that blockchain, where blockchain for real estate is really being centered around, are things like title, right? That's right. You own this piece of property. Where I think people are trying to get it to, which will happen at some point, but it's more complex, is the transfer of equity positions, right? So, hey, I have a equity position in this deal. I want to be able to get out. I want to be able to, I own it with this piece of this ledger technology. So I own it and I understand it. And that's where I think we're looking at, we see the applications for commercial real estate. So I think when people look at this, and you should definitely tell your listeners that blockchain is actually a real thing. Like blockchain works, and that's not crazy. That's not cryptocurrency. That's not metaverse. That's not Bitcoin. It is just purely a technical ledger system that works and is very good.
There's just a tracking system, right? I mean, it tracks all the transactions, and is that something it's a way that those transactions are verified and those things as well? I mean, that's part of that same technology, right? Yes. And so, I mean, blockchain too. I mean, you can go to IBM. I mean, IBM has, you can go get blockchain off of IBM. So it's like it's a real thing. And so think about this. You go buy a piece of property, you've got to go to the title agent. They're going to go back and record. And, we were joking about being in Virginia and old farms and stuff. Well, you have to, there's something scribbled down in the record book down in town hall and, at the city clerk's office. And you have to go back and track all that stuff. Whereas blockchain provides the direct bypassing all of that. You own it. You have it. Everything is recorded, and so that ledger technology is very powerful. How do you see that applying to not only the ownership of, say, a piece of commercial real estate, but also the investment piece as well? Or how does that affect, say, the passive investors?
Well, as I said, I think there will be a potential where this technology could be used for the equity side, right? So not just the physical asset, but also the equity and the ownership of the equity. And therefore, one of obviously the liquidity has always been an issue with commercial real estate, right? You invest, and as a passive investor, you're there, right? You're there until the sponsor wants to sell. So from that standpoint, I think if you can have a way to transfer equity back and forth, there's some real opportunity for that. Clearly, where we're going to get into some issues is federal government's not going to let you, and you know your customer, know all that other stuff. There'll be some requirements. But if you can simplify that, and that's sort of logical, that if you can simplify this, then you can simplify equity ownership, then that's a really, that's a great thing.
Yeah, no doubt about it. What should the passive investor or even the operator listening right now be learning so they're prepared for this technology as it ramps up, as we start using it more and more?
Yeah, I think the thing is, don't listen to the hype, right? Because and as I said, there's chunks that are taken away right now. You can't look at the news without seeing something about metaverse, right? It's metaverse, and blockchain or cryptocurrency and Bitcoin. It's understanding, being able to differentiate the two, and then understanding and reading. I think there's a lot of good sources. Unfortunately, blockchain is very boring relative to the excitement of metaverse and cryptocurrencies and stuff. And so it doesn't get blockchain. As I said, blockchain is just a ledger system, right? So it's not as exciting. The business applications for blockchain is starting to become very exciting, and as we start to see it in the adoption of it. But I think you'll start to see it first in things like recording of deeds and recording of mortgages and recording of leases and recording before it will really start to impact more of the recording of equity interest.
Okay. Well, I'd love to talk about that a little more. Unfortunately, we've got to move to a few final questions, Rob. But
sure.
Do you have any predictions, for the real estate market over the next 6 to 12 months? I mean, whether buying, selling, investing, anything that affects that?
I think that the market is very hot right now, right? So this is a time where there's a lot of volatility in the market and in the capital markets, and so you have a lot of volatility in the capital markets. You have a lot of volatility and real estate typically lags, right? So CMBS, commercial mortgage-backed security spreads, and other fixed income spreads have widened out. How long does that take for the market to the real estate market to adjust? So I think there's some very cautious. I think there's still opportunity, but I think the due diligence and the managing of the expectations for returns is probably the biggest. Right. And I think that's where everybody sort of needs to come to grips. You're not getting 10% preferreds and 20% IRRs. It's just not, at least on something that you want to invest in or that you feel confident that you're going to get. Sure, there's some out there, but for the most part, you have to have your expectation for returns have to be tempered. And that's a hard part, right? It's, you and I were talking before, you were buying properties in 2009, right? I was buying properties in 9 and 10 and it makes me look like a hero. It's any place where you bought an apartment complex for $30,000 a door and it's now trading at $300,000 a door. And I did very little for that. So that's where you have to understand. But the people who are buying at $300 a door, it's all in the operations now.
Yeah. No doubt. Great advice. What about when you're, say, preparing for some type of downturn? And you can answer this question as either an operator or a passive investor, maybe what you like to see in an operator. But how do you prepare for a downturn? Say that something happens in the economy, whatever that may be, and 2 bowlers go out. How are you prepared for that, or even like to see an operator prepared for that? So
I think the biggest thing I look at is, once again, I come back to this leverage. I've been a product where I've saw in the 80s what happened in 90s where over leverage, cross collateralization and all that stuff. And so I've really learned, and I've spent most of my life on the debt side, so I understand the requirements of debt. And so I think appropriately levered properties are what I'm looking at. And that's also an opportunity, right? Because when we feel like we're in a situation now where we've been at historically low rates, making sure that you refinanced when you can, right? Because your time frame for refinancing is coming less and less. So are you appropriately levered to manage the long haul? That'd be number one. Number two, liquidity is always good. My dad taught me, it's the golden rule. He who has the gold makes the rules. And that really comes down to it. If you have, and I also saw that when there were a lot of foreclosures in the 90s where people who had cash became very wealthy from real estate. So making sure there's liquidity as well.
He who has the gold makes the rules.
Yep.
I was writing that down. That's a good quote right there. What about, what's your best source for meeting new investors right now?
So, I look at investors, I think a lot of it is more of providing information, right? And providing content. I think that's where I think the days of going out and trying to, hey, I've got a deal and come invest with me doesn't work anymore, right? It's now about, hey, let me provide information to you. As I said, we find people, we look for sponsors when they can show that they do things differently. And I think that's an easy way. I think there's a lot of money, right? There's a lot of investors out there. They just don't know where to go. And it's scary. There's no, there's no Charles Schwab. There's no place to look at stuff. And so they have to be able to find it, but they're finding it through content and being able to say, hey, how is this person better or different than this other one?
What about some daily habits you have, Rob, that you're disciplined about that have helped you achieve this level of success?
Well, I used to be a lot more disciplined when I was younger. Now it's, now I've learned that it's more. I think, I think there's a couple of things. One is I think it's really important to plan and be organized. I also think that the sources of information are so great now that it really is just like it is. You can be overwhelmed with the sources, but I spend every morning, I go through sort of my handful of publications and I read. And what's great about it is they're not, people would ask, oh, well, geez, you're reading Bloomberg and you're looking at your stuff. Yes, I have a Bloomberg terminal that I look at. And yes, I have Wall Street Journal and CNBC and all that stuff. But there's a lot of information. There's a lot of really interesting content. Medium is a great place where you can find stuff from all over the place. And so getting information like that, I think is really good. Reddit, even though I'm outside their age demographic by a huge factor, I think Reddit is some good information. And so you start to, so that habit is, I like to spend 20 minutes every morning to 30 minutes really trying to gather information.
And I love that because I love the examples too. Thanks for just providing a couple places there that you do go on maybe a daily basis to see current news. And but it goes back to me to constant education, right? I mean, you're just daily in it and, staying in it and educating yourself and reading. And I just think there's a lot to be said for that. I've just seen that across so many entrepreneurs, across so many businesses. If you could pick one thing that's contributed to your success, what would that be?
Not listening to people, right? It's, I've always said it's, really smart people don't necessarily become entrepreneurs because anybody could talk yourself out of it. And I've been very fortunate that I didn't listen to people, right? And every time you start a business, you have enough of naysaying yourself. And so it's never giving up has really been sort of what I've said. It's just, I believe in it. I have conviction for it. I already see it. And so at that point, granted, I'm not building space shuttles here. I build consumable technology for commercial real estate owners, right? Or we provide financial services to commercial real estate owners. It's not like it's, that's always been my big thing. And the software companies that I've built in the past have always been consumable immediately. Entity keeper, right? You talked about it. Just manage entities. Okay, everybody needs to manage entities. I was doing it on a spreadsheet and I would forget about it because the spreadsheet's just one way. Okay. Put alerts and ticklers and be able to do nice work charts. Okay, boom, done, easy. So consumable.
It's awesome. Tell us how you like to give back.
So I do a lot through foundations. We've really been, and I think that's been a really important part of our life is giving back. I've tried in the past, and I've tried different things. I've taken this entrepreneurial approach to giving back. So foundation wise, we do a challenge grant. So hey, you want money from me, that's fine, but I'm challenging you to it. You have to do something in return. I'm not just writing blank checks. That's been a big thing. We've sponsored and helped a lot of organizations here. The other way I've tried to do it is I've always felt like there's been so much negative news and negative press that it's really good and important to spotlight people who have done good in the community. And so we actively go after and seek people who have done good and help and support them in their cause.
That's awesome. Rob, I appreciate you just giving back to us today and being so open about, your successes and what you've done. Even before we started recording, you talked about, you were born into real estate, but what I wanted to highlight there that we didn't talk about during the recording was, you went from cleaning toilets and managing properties to everything in between, but now, just numerous successful businesses. Congratulations to you. But thank you for just sharing those passive investing risks, some different questions that you want to ask of sponsors, when you are getting to know them, thinking about investing. Great tips. I love that. And even thinking about blockchain, I want to continue to help the listeners to be more aware of that technology and it coming into real estate and other aspects of our life. And just so continual education, like you talked about as well. Where can the listeners get in touch with you or learn more about you and your businesses, things like that?
Yeah, sure. So you can look at, my biggest one is Rob Finlay at 30capital.com. And yeah, absolutely take a look at 30 Capital. It's all of our brands and all of our information that we talked about. There's also a lot of knowledge information there as well. So if you're looking at investing in real estate, you're looking at data and analytics, stuff like that. So people can look there.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the number one resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.